What is the market going to do in 2024? Right now it's October, and a lot of headlines are starting to talk about the housing market softening up and sellers starting to bring their prices down to attract buyers because of interest rates. Now, the fact of the matter is the housing market is tough right now, and people that are buying homes are seeing that not only have prices not come down with higher interest rates, but they've also been harder to get into a house with a mortgage payment that's comfortable because of mortgage rates. So the first thing we're going to do is we're going to jump into mortgage rates. In October, we have seen that mortgage rates have continued to move up somewhere between 6.8 and 7.875 for the last 30 days. Now, this is the highest we've seen mortgage rates for 23 years. And everyone wants to know what's going to happen with prices and when are mortgage rates going to drop? And, the answer to that question is the same answer that I've given all year, which is mortgage rates are largely tied to inflation. And so our Federal Reserve is continuing to raise rates to try to bring inflation down. And the fact of the matter is they are accomplishing that. We are seeing inflation come down in many areas in our economy. Obviously, gas is really high in the beginning of October, and housing is still expensive. But when we start looking at some of the different trends in the rearview mirror, the data shows that inflation is coming down. And towards the end of 2023, definitely into next year, we should see these numbers coming down in a meaningful way. So the big question everyone's asking is, what does that mean about mortgage rates? Now, the truth is nobody knows when mortgage rates are going to come down, but they will come down. And most experts are predicting that we will see mortgage rates come down at some point next year. But we're not going to see mortgage rates come down until we see a meaningful change in the costs of goods and services and energy and oil, and people are able to start affording some of these things that have been so much more expensive over the last several years. Now, the other big topic right now in many states like Florida and California is homeowners insurance. It's one thing to go and buy a house that's 40% more expensive than it was just 4 or 5 years ago, with interest rates are at 23-year highs. But then you go and you call an insurance broker to try to give you a quote on what it would take to insure that property. And depending on where you're buying that house, the insurance is a lot more expensive because of natural disasters like fire and hurricanes and all the crazy things that have been happening. Now, the good news is there are still several brokers throughout California where I do most of my business that can get you good insurance policies that are affordable with the types of premiums that will cover you if something were to happen. But it is a lot more work than it was just a few years ago to shop around for insurance. And so if you're someone that's been canceled or you're having a hard time finding homeowners insurance, there are solutions. You just have to know the right people. Now, I would say one of the bigger issues that we're seeing in our office right now is the fact that people are starting to feel the pinch when it comes to money. I can't tell you how many people have reached out to me over the last 30 days because they have high credit card debt. They're just not making enough at their job to be able to, enjoy the lifestyle that they had just a few years ago. And for many Americans, that pinch is being felt, and it's probably going to be felt even more as we head into 2024 with the current conditions we have. So there's a couple things. Now, first and foremost, we are doing a financial freedom workshop once a month where people can come on. We're going to show them negotiation skills, how to negotiate getting a raise right now. Look, in California, it's hard to find good people. And I will tell you firsthand that if you're a good worker and you're just trying to secure housing for your family, you have a lot of leverage. And there's ways that you can negotiate making more money and figuring out how to bring a little bit more home to survive during times like this. The second thing is bad consumer credit card debt. Now, I get it. I've had credit card debt in the past, and there's no shame in this. It's nothing that anyone wants to talk about, but the reality is there are solutions for people to get out of credit card debt right now. When the Fed raises the rates, people are feeling it instantly. If they have things like home equity lines of credit or credit card debt, there is ways to get out of that credit card debt, and you just have to know what your options are. So that is something we're seeing a lot right now. People are calling us. We're showing them all the different options, whether it's a home equity line of credit, a refinance, or looking at maybe one of those hardship loans against their 401k. We have a calculator that can show you side by side which option would be your best option in the short term and the long term. Now, as we look forward to 2024, there's a couple things that we know. Our Federal Reserve, Jay Powell, has made it very clear they will continue to raise rates to fight inflation. They've also said on multiple occasions that they're going to leave rates up for an extended period of time and they're not going to drop them immediately. Now, the thing that people have to realize is just because they leave the Fed rate up does not mean that mortgage rates can't go down. So, when it comes to buying a house, because there's so many people right now that if they could, they would, and they're nervous about what next year has in store. They're waiting to try to time the market, and I get that. The reality is it's impossible to do that. If we look back at the pandemic, no one saw that coming. In the beginning, it looked like it was the end of the world for real estate. No one would have known we would have had a 2% rate just 30 days later, and we'd have seen one of the greatest housing runs we've ever seen. We also have an election that we're going to be looking at, and those definitely have an impact on the economy. Whether people believe it or not, it does have an impact on the economy. So for people that are thinking about buying or selling next year, the best thing you can do is continue to take in information, prepare your home to sell it if that's what you're thinking about doing, or prepare yourself to buy a house. Save up capital, get rid of bad debt, try to raise your income, because if rates drop suddenly, which can happen, it's going to be a very competitive market and it's going to push prices up. Obviously, I'll continue to send you guys updates as time goes on. And if there's anything I can do for you, if you have any questions, feel free to give me a call at the office. Listen, there's a lot of questions right now. People are wondering how to manage their finances. Should they sell? Should they buy? These are questions I answer every day. And so if you have any questions like that, please call me at the office. I would enjoy talking with you. I love connecting with my past clients. The phone number will be in this email, or you can shoot me an email. Other than that, I hope you have a great October, and we'll put another post out next month.